It's an exciting day in the crypto world today as some of the giants are facing liquidation. So let's jump in here, take a look at what's going on. So the markets had a nice little update today, up about 1%, and for the Dow, 0.5% for S&P and NASDAQ. Nothing exciting there. Market just kind of continuing to move a little bit higher ahead of CPI. That's probably expected to come in, relatively in the range that it did last time, maybe a little hotter, maybe a little softer, probably a little hotter, but that's not a surprise to the market. Elections, the market's expecting a divided Congress, and markets like that because that creates certainty or a little bit more certainty in terms of gridlock. So, markets are up on hopes that there'll be a little bit of gridlock and some balance of power there. So the big news today is the crypto world with Bitcoin, FTT, Sam Bankman-Fried, and CZ at Binance. Right now, Binance CEO announced the intent to acquire FTX to cover the liquidity crunch. Alameda and FTX have got themselves into a little bit of a liquidity crunch. They're over leveraged, been trying to borrow a lot of money. And then CZ announced the other day that he was going to unload his FTT holdings. And obviously, we know what the result of that looks like today. This is on the daily, by the way. So here's FTT. You can see FTT just falling off a cliff, and that's bringing systemic risk to the markets and concerns about mass margin calls, liquidations, and things like that, which ultimately brought Bitcoin down. Just like we talked about yesterday, that this low would most likely get tested, which it did today. It's been tested once. It held. That's that 17,500 level back in June that Bitcoin set, and that was tested and it held. So we will have to see how this holds out here today in the next couple of days. You're going to hear a lot of people say Bitcoin is done, crypto's done, it's going to zero. And you'll hear other people say that this is it, Bitcoin's going to the moon, everything's going to the moon. And here's the thing. One of the things I was asked recently, one of the viewers sent a message, and I have comments off because of spam bots and scams and things like that. There's just way too many out there. They're starting to hit Facebook now and everywhere else. Haven't had that problem on Twitter yet. So a couple of Twitter comments and an email that I received. A young individual was asking if they should borrow money to buy crypto or stocks and invest. And, I don't give financial advice. I'm not a financial advisor. I don't advise people on what to do. I just tell you what I'm seeing, what I understand is going on in the economy, how, I've navigated my career in these types of markets. This time is different. There's a lot of people showing you a lot of different charts and indicators that tell you the bottom's in, and it looks just like it did in previous times. And Bitcoin's done this over and over. Crypto's done this over and over. But, the thing is, this is a macro bear market. Those things happened in a macro bull market with trillions of dollars, $10 trillion pumped into the markets over the last 10 years, 10, 12 trillion over the last 10 years since 2009. A very different risk-on environment. When the Fed pulled the plug, this happened right here, 2017, 2018. That was when the Fed pulled the plug. The Fed pivoted right in here. Markets were off to the races. So right now, liquidity is being drained from the system. Rates are increasing. It's a risk-off environment. So yes, this time is different. It's very different than last time. Can Bitcoin hold here? It could. Bitcoin is very different, and there's a lot of people looking to buy Bitcoin as it hits the lower levels. But you should definitely never borrow money to invest in crypto or stocks, because those are risk assets. Crypto are the most risky of the risk assets, including Bitcoin. A lot of the money's coming out of the markets, going into stocks. That's another reason stocks are up a little bit, because the speculative cash is coming out of crypto. And you can't expect a rebound, a bull market, anything like that anytime soon without the Fed participating, meaning they stop tightening, they stop hiking, and if they do reverse course, then you can expect bull market on. And then that would be the time to, really, that's when risk on happens again. And I'm saying I would never advise anybody to borrow money to invest in crypto or stocks. You should only invest what you are willing and able to lose. Willing is one thing, able is another. You should never invest more than you're actually able to lose without feeling it financially, without putting yourself and your family under stress or pressure. So when people tell you the bottom's in and this is the best buying opportunity you'll ever have in your life for crypto or stocks or anything like that, that's just nonsense. There is no best buying opportunity you'll ever have in your life. Those days have come and gone. That was here at the bottom of 3,000. That was over here, in the pandemic, a bottom of 4,000. That was back here in the early days. Right now, sure, you can get some gains. You can get some exponential gains, maybe 2 times, 3 times, 5 times when the market conditions are right. And the most important thing to know is the top, not the bottom. You need to know when to get out and take profits. You can't always expect assets to always go up forever infinity. And, long-term view is good, to take a long-term view and stance when you're investing. You always want to do that unless you're a trader and you have skills and the time and ability to pay attention, and you know how to use the system to trade in and out, kind of like I've been doing here in this, since Thanksgiving of last year, when I told my family it's time to get out, when I was screaming from the tops here and people told me I was crazy, that, it was getting ready to go to the moon. And I'm no genius. This was because the Fed was out of the game. So the Fed said it's risk off. And, you've got some bounces, and you had this whole, Michael Saylor stuff going on here, Do Kwon going on here, kind of jacking price up, and they got liquidated. Well, Do Kwon did. And, the big investors have been keeping the price up at these levels because there is a lot of interest at the, institutional level, bigger whales kind of holding the price here at 20K. But there's still a lot of liquidations, a lot of leverage, and a lot of stuff that's got to be cleaned out from the system, like Alameda, FTX, even, sorry about that, thought my phone was off. Even, some of the other players in the industry, like a MicroStrategy who's highly leveraged. At some point, if this price goes down to, 14,000, 10,000, whatever, he's going to get some margin calls. He's going to get some loans called. And depending on how his company's cash position is, he may or may not be able to service that debt. He may have to start selling some Bitcoin. So, there are individuals and companies out there that can be pressured in these times. And then there's other coins that are obviously going to, may go to zero and may just go away completely. But, as you can see, everything is kind of following Bitcoin in this whole situation that happened here with FTT, FTX, and with what's going on with Binance. So, these are the types of things you have to be aware of in a risk-off environment when, people are getting margin called, when there's liquidations happening, when the miners who are in trouble, miners are in serious trouble right now. Several of them are, going to have to potentially file bankruptcy because they're not, bringing in enough money with all the competition in mining, with the hash rate being where it's at, difficulty adjustments, and, being below the profit margin. The hash rate is at all-time highs, difficulty is all-time highs, and miners they're losing money. So how long can they continue to operate? And once they start shutting down, that's going to significantly reduce the hash rate and the ability to process and sustain the network. Nobody really has an answer for what happens if it's not profitable ever at this point, which I don't know that could happen. But if you look at this scenario here where the hash rate's been going up and it curves on these types of moves, obviously these are lagging indicators, right? In terms of what's happening with the hash rate. As the hash rate goes up, goes down, miners turn on, shut off. Miners are going to have to start shutting off because they don't have enough power. This could potentially capitulate down, price could capitulate down, and you'll see this whole area, where the buy signal was given, which in the past has typically been a good period and point to buy. You'll see that invalidated, like we've seen it get invalidated here. Here was your buy signal here. Typically, price never goes back down below that, which it has. It's broken that level, but you can see the hash rate has followed the same pattern. It was up, 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 rounded over, and then had another capitulation in this area here. This is all last year. And if you go back and look at, the 2017, 2018, same thing. Hash rate was on its way up, fell over, worked its way back up, fell over here at, the pandemic 2020. So, these indicators that people show you that tell you the bottom is in because, it looks exactly like it did in Bitcoin's history, and it does this every single time. Again, this was in a Fed, risk-on, Fed-driven, liquidity-driven, macro bull market environment. That's not what we're experiencing now. This time is different. And every indicator out there, every RSI, every MACD, every bull market support band, ribbon, anything and everything that you want to look at, custom-made indicators, they just follow price. They're lagging indicators. So as long as the price is sustaining and holding, the averages are going to catch up with that price. Let's take a look at daily moving averages. So the averages are going to look bullish and catch up with these prices. But then as soon as price flips, the averages are going to flip with the prices. So all of the indicators and, things like that, people are shouting, from the rooftops that the bottom is in, and, it's doing what it's done every single time, doesn't necessarily apply in a risk off global macroeconomic bear market risk off environment, which is what we're in. Will it last forever? No, but we don't know that it will. We don't know that it won't. Will Bitcoin break 17.5 and go down and hit that 14, 15,000 level, which is, your next level of, historical major structural support for Bitcoin, and test that? We don't know. But if it breaks 17.5, it probably will, because there's a lot of people are going to be running for the hills as the price goes down. And what we do know is in the last 2 years, let's say, really since 2018, actually. So the last 4 years, right here, Bitcoin hit 3,200. And that was December of 2018, right here, March of 2020. 2 years later, Bitcoin hit 3,800. So it's done it twice in the last 4 years. It's gone down to those levels. Does that mean it's going to do it now? No, absolutely not. Does it mean that it's possible? Yes. Does it mean that it's probable? Not really probable. Does it mean that it's likely? No. What is probable, what is likely, is that this 17.5 level might get tested a couple of more times, and it's either going to hold or it's not going to hold. And right now, the probability looks like what we've seen here lately is that, it has held on a couple of attempts. We've only had really that one attempt at that level. Excuse me. But it's held the 18,000 level pretty good. So if it holds up in this environment right now with everything that's going on, barring any mass liquidations or other events that are lurking out there under the surface, then that's going to be a really good sign that the Bitcoin could put a bottom in this area. Maybe it leaks down to 14, 15, it pops back up to 18 to 20 to 25 and back down. So it could range in that area for quite a while until inflation is down, the Fed can stop raising rates and stop tightening, and more importantly, when the Fed potentially can pivot and start juicing the markets again, if they ever do. And the one thing that Powell said in his meeting the other day was that they are not afraid of the risk of over tightening. They are more worried about inflation staying too high, too long, and becoming entrenched, which puts real stress on the economy, which we have not seen yet. So that's the thing. Markets have not priced in real fractional stress on the economy and damage to earnings because of the inflationary environment that we're in. People are still spending. We're coming into the end of the year where a lot of people have a lot of money. People that are getting laid off have severance. There's a lot of cushion, equity in their homes that's starting to get eroded. 401ks are just starting to get eroded. The consumer and businesses haven't felt real pain yet because of the season that we're in, coming off the pandemic, people wanting to get out, cabin fever, spending, pent up demand, savings, things like that. But once we get through the holidays and we get into Q1, Q2 of next year, somebody asked me, did I hear you right? Midway next year before you're thinking about a bull market possibility? Yes, I think at the earliest possible chance that we could see for the Fed being able to back off and to see if the economy, where the economy is going to stand structurally from the standpoint of earnings, inflation, recession, things like that, probably Q2 next year before we have a real good indication of where the economy is headed in the near term. The markets haven't priced that in yet. What the markets have priced in is a hot CPI print tomorrow, the Fed doing what it did last meeting. If the Fed indicates that they're going to raise 75 basis points coming in December, markets will take another leg down and test, the lows that we're at right now that have held. So Bitcoin has held and the markets have held. Let's take a look at that. These are the October lows. Markets, have held and they're back above, at least Dow is back above the 200-day moving average. NASDAQ is still below all major moving averages, as well as the S&P closer to those lows. But the Dow, again, capital rotation, and stocks have been having a good little day. We could continue to see some more of this rally in the traditional markets, especially with the liquidity coming out of this is the dominance. Let me take the daily average off of there. With the liquidity coming out of the markets, crypto markets going back into traditional markets. So let's take a look at the total crypto market cap in terms of daily average. Lost the 200-week or 200-day moving average. Bitcoin has lost the 100-day moving average. That was a big area of support. Ethereum has lost it. XRP, Solana's taken a big hit because of the Alameda exposure. Dogecoin has just about unwound that entire move that it made over here. Found support on the 200-day, so that's interesting. But just remember, nobody knows what's going to happen. Anybody that tells you that the bottom is absolutely in, that this is the best buying opportunity that you'll ever have, for Bitcoin and crypto, may or may not be potentially, to say this is the best opportunity you'll ever have. I mean, that's just not a good statement to make, because we don't know what's going to happen. We don't know if this, something happens. Like, look what's happening right now with Alameda and FTX, causing that big of a market move in one day, just on speculation, on fears. What if something real happens? What if Alameda really does go under and FTX really does go under and Binance can't bail them out? Binance starts to feel pressure, and MicroStrategy gets liquidated and the miners have to shut off. And those are the risks that we're facing, and the market could tank and stay down there for quite a while. Crypto winter can last for years. So if you buy at this point and the market drops down to $3,000 or $4,000, I mean, you can buy 3 times as much Bitcoin down there than you can buy right here. So, you got to make your own decisions. But, if you wait it out here for the market to recover and get back to these 20s or 25s, and the Fed has stopped and slowed down and inflation's under control and some of these other systemic risks out there have been resolved, and that it's, fairly stable economic times, well, then you haven't lost as much buying up here for 20% more as you have where you could have bought 3 to 4 times as much down here. So it's all about risk reward. Sorry, my allergies getting to me here. It's all about risk reward, and it's all about managing your, your entrance and your exits, scaling in, scaling out, and understanding anything can and will happen, as we saw in March 2020, as we saw in the 2009 time period, as we saw in 2018 with the Fed pulling in and getting out of the markets. And as we're seeing right now with, Do Kwon, FTX, all of the things that have happened here, you have to manage your risk, and you never want to borrow money to invest in risk assets. You only want to risk what you're able to lose and not affect your lifestyle. And, you want to make sure that you understand, what it is you're investing in, what the likelihood is of a rebound, the overall global macroeconomic environment that you're in. Is it risk on? Is it risk off? Is the Fed tightening? Is inflation high? If the Fed's tightening, inflation's high, and, we've got recession fears in the forefront, not always the best time to take, exorbitant risks. And again, it's always best to know or understand where the top is versus the bottom. It's very difficult to understand the bottom and get in at the exact bottom, but you definitely need to know where to take profits so that when this happens, you can buy back in here and then, take those exponential moves. And when you do buy at these levels, if this is your level and you feel like the bottom's in, then, that's fine. And if you're willing to take that risk, just make sure that you can stay here for the long haul, and that you've got a longer term viewpoint, because again, anybody who had a 5-year outlook, that bought back here at the peak, that's not working out for them right now. Anybody who bought up in here, in that 60,000 range that, has a long-term outlook, it may take years to get back there. We don't know. So it could get back there, as we've seen, these levels can get hit very quickly, but it can also take years to get back there. And, right now, the most likely scenario that we're facing is it's going to take a while to get back to these, these levels that we came from, just because of the liquidity cycle we're in, and the global macroeconomic cycle that we're in right now. So these are the things that I'm looking at, and I just wanted to share that today. Things are kind of playing out kind of like we've been expecting. Hopefully this bottom will hold up here. I know a lot of people are counting on that, but if it goes lower, then it's a good buying opportunity, and you can buy twice as much as you can here if it drops lower. I know there's a lot of people waiting for it to drop lower to buy, but it may just hold out right here. If it holds out right here, that'll be a great thing in the long run for Bitcoin, a great thing in the long run for Ethereum and crypto, the projects that make it through. You might see some nice returns, but I think our days of 20, 50, and 100 X's on Bitcoin, Ethereum, and major altcoins are kind of non-existent right now. But maybe a 2X, a 5X, something like that, maybe even a 10X on some of them is pretty realistic potentially in a bull market, risk on, Fed driven liquidity, flooding cycle. So these are the things I'm looking at. I'll see you in the next video.